Abba Bubakar Fanami, you're welcome. I think all right, guys. All right, guys. Welcome. Welcome to this very special webinar. Welcome to this very, very special webinar. Like I said earlier, it's going to be a 4-part series. And within the 4-part series, we're going to be holding you by the hand and guiding you to things you should know about within the financial markets. This is by far the largest market in the world. I mean, a market that accounts for up to $5 to $6 trillion in daily turnover. It's the biggest market you can ever imagine. And I can assure you, you do not want to miss out on what the market has to offer. So we're just going to give it a bit more time so that, we can have more people join us. We're just going to wait. We're just going to give it a little more time, probably about 5 minutes, and then we take off with what we have for today. All right. All right. So if you just give me a moment, let me quickly invite a few more people. Invite. So Abba, you're welcome. Jamil, Okor, Chinedu, Sam Ukoje, you are very much all welcome. You're all welcome. It's nice to have you here. And it's nice to have you here. Okay, so Abba is raising his hands. I think Abba has something to say. Okay, so Ayilara Latifat, you're all very much welcome. So Austin Ayegbeni, you're welcome. So for those of you who might have questions, just be sure to use the Q&A session as we proceed. Just use the Q&A session as we proceed, all right? So for those of you who have questions, we're going to have time to attend to everybody's questions, all right? We're going to have time to, to get to everyone's questions. And one of the things I like to do as a trader and a mentor is that I like to teach using very practical means, and anything that I'll be showing or teaching, I like to explain it and also take trades using that same method. And I want students to see exactly how it is applied, why we use it the way we use it, and the complete process behind what we do, and also how we manage ourselves and manage our emotions as we actually get ourselves involved in a trade. Because at the end of the day, it ultimately comes down to how you're able to manage your emotions and how you're able to manage yourself. So I want to welcome all of you to this very, very special webinar. I don't know. I believe you can all see my screen. I believe you can see my screen by now. I'm not sure if you can, but please, I need you to confirm if you can see my screen. You just, I don't know if you can see my screen. I believe you can see, I believe you should be able to see my screen. Okay, your screen sharing, all right. So, ladies and gentlemen, your chat, yes, you can see my screen. Yes, I can see your screen. All right, guys, so you guys can see my screen. Thank you very much. So please, with respect to this webinar, one of the things that I want to appeal to you to make sure that you are completely given to what we are going to discuss today. That is because every single thing that we're going to teach, they are all very, very practical things. There are things you can apply. There are things that has gotten myself profitable and also gotten students profitable within our community. And I can assure you that if you commit to this, learn all the things I'm going to show you today, give yourself time to actually backtest and learn all the things we're going to show you today, I can assure you that you are going to have a very, very good result. You're going to have a very, very good result to show for every single thing, every single sacrifice that you are going to commit to this. All right. So now I want to quickly head over to a whiteboard and show you some of the things that this is all about. I want to show you some of the things that this is all about. If you remember, going by the topic of today's episode, it is called Unveiling the Ultimate Trading Strategy. Unveiling the Ultimate Trading Strategy. Now, the ultimate trading strategy is, I want you to have one thing at the back of your mind. The ultimate trading strategy is a strategy that works for you, a strategy that you can make your own, and this strategy can make money for you irrespective of market conditions. Because at the end of the day, we have people who tell you that, oh, this system does not work in market condition, this market condition, whether we're in a bull market or we're in a bear market. It is the responsibility of every trader to be able to generate consistent returns. That is what this is all about. Being able to generate consistent returns and making no excuses about it, using market conditions as an excuse. That is what this is supposed to be able to, that is what this is supposed to be able to do for you. All right. So the number one component that we're going to look at is the component of consistency. And of course, before we get into looking at the consistency components and all those things, I want to quickly take a moment to appreciate the sponsor of today's webinar, and that is Tickmill. If you are going to be very profitable as a trader, if you're going to make money as a trader, long-term, short-term, in any interval, in any time frame, I can assure you that you are going to need a very, very good broker for that. Because at the end of the day, you do not have direct access to the market. Your broker has the access that you don't have. And you want to make sure that on the side of the market that you do not see, that your broker can see, you need a broker that you can actually trust to be able to get the job done for you. That is the very essence of why you need a very solid broker. And if you look up here, you're going to find that Tickmill has a lot of authorizations and regulations across very, very top tier entities. We have regulation in the UK, in Europe, Asia, South Africa, and Seychelles. Now, if a company is transparent enough to submit itself to be regulated by all of these authorities, I can assure you in the long term, this is the company you should be doing business with. Because if you're doing business with this company, you are very sure that they're not going to wake up one morning and tell you that, oh, we're no longer interested in business, we're out of business. And you are very sure that they're not going to do anything that will put you in harm's way within the market. Because if a company is willing to submit itself to multiple levels of scrutiny, multiple levels of regulation within the business, especially in a business like ours, you should know very well that a company that is able to do that is a company you should trust. And of course, we have multiple reasons why you should be trading with Tickmill. Loads of assets. You will not even believe how much assets you are going to be able to trade with Tickmill. From Forex, and when we even come into Forex or within the Tickmill space, we have unlimited number of assets, especially in currencies and Forex, stocks. You can even buy and sell bonds. And in recent times, of course, we've seen a spike in people who are interested in trading crypto. You can absolutely trade all your favorite kinds of crypto with Tickmill. And even over 100 stocks of the US company can be traded on Tickmill. So this is a broker you should be trading with. I mean, if you're someone that equally falls in love with trading, exotic pairs, there are plenty of it for you to play around with. And I can assure you, you should be doing business with this. So with this company. So of course, loads of account types, very nice account types. If you have a pro account, the spreads there, you will not even believe how tight the spreads are. And in fact, one of the things that I've consistently blown away clients who come to Tickmill is how tight the spreads are. That's actually one of the things that comes. And if you take Tickmill and put it on the same scale with other brokers and probably make a side-by-side comparison with 10 other different brokers, you will see that Tickmill comes out on top with the kind of tightness of spreads that you are going to get and the variety of account types that you're going to get. So, and you even get leverage up to 1 to 500. So, not to mention these types of free education that you equally are able to have access to. As long as you are a subscriber of Tickmill, you can have access to these types of education from time to time, education that works, education that actually helps you generate income within the market. So these are things you want to be looking out for, and we want you to actually succeed within the market. We don't want you to lose your money in the markets. And that is why we invest a lot of time and energy into education, because we want our clients and the students that come through our doors to be very successful in the market, because when you succeed on our own end, we actually succeed. So, I mean, if you're interested in equally becoming an IB, you are equally going to be able to, generate lots of side income for yourself as an IB. All right. So please just make sure that, you look through the Tickmill website. Very nice, very interactive. You can see very nice things are just moving around here. Very, very nice. Everything is clearly spelled out, clearly detailed, and loads of deposit options, instant deposit, instant withdrawals. Very, very safe. You can get your money as fast as you put it in. So please make sure that you check out all the features that we have to offer. And of course, MT4, MT5, very nice. And very recently, Tickmill just launched the copy trading tool. That's the social trading, where you can just go online and follow the most successful traders. And all you have to do is just copy them, and then their trades automatically replicated, on your own account. So as they make money, you make money. All right. So very nice. And of course, very easy to get verified as well on our platform. So I think let us get into, the meat of today's lessons. So one of the things that I want to talk about is when we're talking about a trading strategy, you want to be sure that in the next 10 years, that whatever strategy you pick up in your first year as a trader, you want to be sure that 10 years time, you are still able to sustain trading that same strategy. This is something you want to make sure that you are able to do, because if a trading strategy if you cannot consistently follow that trading strategy, then something is wrong, either with you or the strategy. Consistency is the ultimate thing in the business. And why I say consistency is the ultimate thing in this business is because you need to be able to, your trading has to get to a point where it absolutely becomes boring. Where do you have swap-free accounts for Muslims? Okay, I'll answer that, Jamil. Yes, we do have swap-free accounts for Muslims at Tickmill. Absolutely, we do. All right. So please, all questions, I'll take all questions at the Q&A. All right. So consistency at its finest is you being able to come to your screens, come to your charts, and do the same thing, follow the same plan over and over again, irrespective of previous outcome. Now, if you are going to make a decision on your trading strategy, on your trading system, that should not be done because the last trade wasn't good or the last trade was so good, and then maybe it's time to now increase the risk. No, if you want to be able to do that, it now comes down to the third item we have here, which is quantifiable. It should be able to work with a very, very large sample size. That is what we're looking at, a large sample size. Now, if we have a large sample size, if you take, let's say, 15 to 20 trades or 50 to 100 trades, and all of these trades are documented, and you take these trades using the exact same rules of entry, the exact same rules of execution, from your technical analysis to your mindset, you follow the same procedure over and over again. And that is where it becomes quantifiable. And then you are able to look at your trades at the end of a certain period of time or at the end of certain numbers, and now see how you can actually make amends and see how you can actually tweak all these things. That is exactly what a consistent trading strategy should do for you. And when we speak about being objective, we want to tell you that the objectivity of your trading strategy is not something that is based on how you are feeling in the moment. It is about, what do the numbers say? What are the rules? I am looking at a particular system. The system says whenever the market is at support, I buy. Whenever it's at resistance, I sell. For instance, that is your simple rule. If the market comes to support, you should be buying because, yes, the market has arrived at support and you're not looking for any other thing. The only thing you are looking out for is to be as objective as possible, and thereby helping you to eliminate all forms of emotions in your trading. Because if you do not eliminate emotions, if you're not objective in your dealing, you will naturally mess things up. And this is where we begin to see traders who they open a trade for let's say a technical reason or a fundamental reason or a logical reason, whatever it is the reason was. They open a trade for this reason, and then they begin to close the trade because of how they are feeling. For instance, currently in a buy trade on Aussie dollar on my live account. Now, I don't know what's going on in the trade right now, but let's say I get down to that trade and probably, it's back in drawdown, which is natural. It could happen at any given point in time in trading. And the trade gets back in drawdown. You're like, the trade is in drawdown. Then you freak out and you quickly close out the trade. That's not how to trade. If you have seen that over time, your system pays you money, you take the trade and you let the market do its job. You let the system, you let the strategy make its returns. It is the job of your trading system to make the returns, not you. Because your job in the initial stage is to actually build a system, to formulate the rules, to go into your chart, just like I'm going to be showing you some live examples of how we actually trade and look at the market. We're going to get into the chart and you're going to see all these things, how we actually look at the market as traders. It is your job to develop that strategy. And when you develop the strategy, then it becomes your job to allow the strategy to do its job. This is exactly how you should be looking at the market. So the number one component of a profitable trading strategy is that it must be consistent. Across 100 trades, across 10, 15, 20 trades, you should be doing the same thing. You should be extremely consistent with it. You don't want to, and it has to also be simple. You don't want to take a trade and then maybe you look at a particular trade and then you come back the following day and you're looking at your computer and you don't even know why you took the trade in the first place. Or you're looking at the trade and you're asking yourself, how did I take this trade? What made me take this trade? You don't know because you are not consistent. But if you are able to stay consistent with your approach to the market and with your approach to the trading game, the moment you look at the chart, the moment you look at your system or you look at a trade you've taken, you know why you took that trade. And when you want to make a correction, you know exactly how you want to be making these corrections. All right. So this is exactly how you want to be approaching the market. This is exactly how you want to be looking at it. And of course, a profitable trading strategy, by all means, is absolutely verifiable. Right. A profitable trading strategy should by all means be very much verifiable. Sorry about that. Should by all means be absolutely verifiable. I think I did press something on my screen. Sorry about that, guys. So should be verifiable. You should be able to verify your trading strategy and see, yes, if based on this number, based on X, X, Y, Z, and this and that, I'm able to say, okay, if this strategy is profitable, I can keep trading it long term. This is how much I am able to make, give or take within a quarter, within a month, within a 6-month period, within a year. This is how much I can generate using this strategy. So you should be able to verify its results. You should be able to verify its data. All right. So this is exactly, these are the things that, profitable trading strategy should actually have for the trader that is looking at it. Okay, so participants, you guys are raising your hands. So please, what we're going to do, please, if you have any questions, kindly type them out in the Q&A sessions, all right? Please type the questions out in the Q&A. So when you type the questions out in the Q&A, please make sure that you just relax, try to listen as much as you can, and just try not to, I'll try not to get into answering any questions at the moment. All right, I'll just have the questions typed down, and I'll be able to connect with you. All right. So let us quickly get into the chart. All right, let us quickly get into the chart. So the components of the Chikwado trading strategy. The components of the Chikwado trading strategy. All right. So the paramount aspect of our trading strategy is that our first rule is that we must identify the trend. That is our first rule. We must identify the trend. If we do not have a clear trend, we do not trade. We do not trade anything that makes the market moves, any sideways moving market. We don't look at it. We don't care. We are not going to be interested in a market that is, doing something like this. We're not really interested in anything that looks like this. We want to see a clear direction. And this is one of the biggest problems we have within the trading space. It is not every time that the market is ready to be traded. It is not every time. And when we're in a situation where the market is not ready to receive you as a trader, or to receive your system, or to receive your order, you don't put your order in. Whether buy or sell, you stay out. And one thing I have realized over the years of trading is that even as a trader, even when you're not trading, you are actually trading. Because sometimes the best trades you could actually make could be the series of trades that you don't even take. The moment you avoid taking certain trades, certain very low quality trades, I can assure you, you will be absolutely fine in the long run in this business. So if we do not have a clear identification of the trend, if we cannot clearly identify an uptrend, or we cannot clearly identify a downtrend, a market making lower lows and lower highs, we will not enter the market, no matter how enticing it looks, no matter how maybe we've gone a few days, or we've gone a whole week and we don't have a trading setup, we've not taken any trades. We will stay out of those conditions. We'll stay out of the market in those kinds of conditions. And this is exactly one of the best habits you can actually develop for yourself as a trader. Learning to stay clear, identify the trend. And in fact, if you can actually identify a clear trend and stay in line with the trend, you have solved at least 50% of your trading problems when it comes to the technical aspect. And then the rest of them, we're going to be talking about mindset. All right. So the next component that we look at is liquidity. And I think at this point, I'm going to have to go into the chart. So currently I'm sitting in this trade. Like I did mention earlier, I am sitting in this position. It's a buy setup for Aussie dollar. And if you don't mind, I'm going to quickly take a bit of time to explain the setup and how we managed to arrive at this setup, like based on how we trade. I know if you look at this thing on my chart, you might think, oh, this is a chart pattern, this is an expanding channel. Please, this is not an expanding channel. And if you give me a moment, I'll explain that to you, why it is not an expanding channel, or I think it's a expanding pattern or something like that. Call it. That's not anything close to what it is. All right. So first of all, when we look at, all right, let's hide that. Let us hide all of this. All right. So now, if you clearly take a look at how we look at the market, one thing that we want to identify here, I believe that if we look at this, side of the market, one thing we can say is this is a low, this is a high, this is a low. We have a lower high, lower low, lower high, lower low. We have a run on liquidity. We print a lower low. All right. Now, what I am trying to get to within this is simple. We can clearly see that this market, looking at it on the weekly time frame, this market is printing lower lows and lower highs. Lower lows and lower highs. Now, this is the first component of the trading system that we use, the identification of trend. We first of all identify trend. Remember, we first of all identify trend. You can see we identify trend of the market flowing 1, 2, 3, 4. The market is heading down on the higher time frame. And while the market is heading down, I want you to understand something. There will never be a change in market direction if stop losses are not taken. Now, oftentimes, I hear people talk about, oh, this broker manipulated me, this, that. No, it is not your broker manipulating you. Your broker does not have a hand in this. What usually happens most of the time, the broker gets its feed from the liquidity providers. And you must know one thing, the guys who run the market need liquidity. The banks need liquidity on each side of the market. Let us say, for instance, there are a couple of guys who, it is not like you and I who probably think this current trade that I'm in is 15 lots. That's a very horrible 15, guys. This is 15 lots. Now, if I am 15 lots in a trade, it is very, very easy for you to look at, for me to get 15 lots. When I place an order of 15 lots, I mean, it's very easy for the broker to have enough orders to match, is enough to have enough liquidity to match my 15 lot order. It is very easy, right? Now, if the broker is able to easily have enough order to match my 15 lots, it tells me one thing. If my orders were higher, let's say, for instance, I am now trying to get into a trade of, let's say, 10,000 lots. It is the liquidity to do that. It is not something that you just pick up on the street or you just click buy or sell and then your orders are filled automatically. No, your orders are not going to be filled automatically. The guys who are going to fill the orders for those institutions absolutely need liquidity on the other side of the market to be able to fill their orders for the market to then go in the direction that the market wants to go in. So why we identify the trend, when we identify a clear trend within the market, we are very much aware that at high points, at the highs, behind every high, there is an order behind every high in the market. Now, this is the philosophy of our trading. Now, this is explaining, and remember I told you the components of our trading system. The first one, right, is the very first one is trend. The next one is liquidity. Now, trend is down, but behind every high, this high is here, there is liquidity behind every high. And trust me, if you go into your charts and investigate this thing that I am showing you, you will be blown away at how consistent this thing is. If you get into your charts and investigate this, you will not even believe how many times this thing plays out. In fact, just looking at this downtrend alone, I can show it to you multiple times, many times, how many times this plays out and how consistent this really is. Now, we have identified the trend. We are looking at the market structure. Of course, the market is pushing down. But we know that while the market is trending to the downside, there are people who would have gotten involved at these highs. Their stop losses are right behind this place. Then there are people who have probably gotten in here on the institutions, small funds that have their trailing stop losses, or even individuals who trade large, who trade long term, who have all their orders and stop losses and trailing stop losses around all these points. The market is eventually going to need this liquidity to continue to fuel its move to the downside. So when you see me draw this 1, 2, it is not a chart pattern. It is marking on liquidity that has already been taken. For instance, if we just hold the shift button down, you can see that, yes, the market traded right above this high. Can you see that? The market will have this high, the market created this high, and the market then traded above the high. So now we have a run on liquidity. And the reason I have this here is because I'm expecting the same way this liquidity was taken at this point, I'm also expecting that this liquidity gets taken here as well. And then from that point, we are going to have enough fuel for us to continue to run this market to the downside and resume the long-term trend. So when you see the market, oh, you see the dollar is very, very weak. Well, you might want to think that the dollar is weak, but at the end of the day, what really matters is that it is not that the dollar is weak, it is the direction that the institutions are moving price, and they will always need liquidity to move the price in a given direction. It is, even if the market wants to come from here all the way to this point, it is never going to move in a straight line. It is going to move there in a trend, and it is going to move there running liquidity and generating liquidity along the way. So if the institutions, the large institutions, the large funds, please, if you have any questions, please write them down. If the large institutions have any need, of course, they want to get into a trade and they are taking very, very large positions, they will not be able to just go out into the market and push the buy order and then that order is there. They must wait at very, very specific points to be able to get enough liquidity to get into the market. That is exactly why you do not trade everywhere. If you want to get high quality trades and high quality setup, you must wait for those setups to come to you. And the institutions are, if you notice here, the lowest candle here I have here is 1 hour time frame. I don't have 15 minutes, 5 minutes, 1 minute, all those things. I don't have them here. If you must get into very good trading setups, you must know that the ultimate place you are going to get that kind of trading setup is on higher time frame. That is where you're going to see the direction of the market very clear. That is where the trend is strong. And this is the place where the institutions are actually positioning themselves. I mean, just ask yourself one simple question. If you had $1 billion, would you be on 1 minute time frame scalping with $1 billion in assets? Even if you had $100 million of clients' money, you would not be on 1 minute time frame scalping those places. You would not. You would be at very high quality places where you would wait to get into those positions and run the trade over a period of time. That is how institutions trade. That is how big banks, that is how the big boys who actually do things within this market, that is how they trade. All right. So this is one thing I want you to have a deep understanding of. And now, personally, if I decide to walk you through this chart, I mean, CTA students already know that if you bring a student of mine who has studied under me, they will easily show you all the liquidity points on this chart, how they've been taken and how trades were found in those places. And of course, yes, I know I am actually in a trade here, but obviously, if you name any pair, I can actually go there and pick it out for you. However, I want you to just have a very look at something very simple. For every single time the market breaks a high, there's usually a turnaround. And here we have this high, the market breaks it at this point, we follow through with a mega sell-off. Please mind you, this is higher time frame. This is a weekly chart. And then we create this high. And then we create this high here. The market runs through this high and we follow through. We create a high, we hit it, we go. We create this high, we break it, we go. This is why you don't see me, oh, the market has broken it, it's time to wait for a retest, and then we are buying that. No, we're not buying the retest, guys. And it goes right around everywhere. Every single time we take out the low on the other side, we break this low, we go. We break this high, we come down. And even on this side of the market, within this trend, take a look at this. We engineer this high, we create this high, we break the high, and we trade back in. If you do not have an understanding of how liquidity is generated within the market, and that is why liquidity is the backbone of everything that we do at Chihuahua Trading Academy and how we teach students how to trade. If you do not have a deep understanding of how this thing works, it is going to be very, very difficult for you to succeed in these markets. I can assure you. Because I have come from a place of struggling within the markets, not being able to generate consistent profit. And the moment I saw this, I could not unsee it, and I've not unseen it ever since. It has stayed with me, and that is how I am able to trade. And that's why I get into trades, and I'm able to call these trades in front of students, in front of anyone. If you follow me on Instagram or anywhere, you go there and you will see the trades. The reason is because I have so much confidence in this. I have seen this over time. And even if you get down to lower time frame, and this particular trade here, it repeats itself everywhere, that even within this small window here, if I get down to lower time frame and I show you this entry, you will still see that there was a run on liquidity somewhere before the market moved. So we positioned ourselves somewhere here. The market comes for all of this money here. We have all of these guys sitting down pretty here at these levels. The market comes, takes out this low, we take off, and then we shift. So what happens next? The market comes for this low here, takes out this low, bounces right into this. This is a different ball game altogether, but bounces right into this, and look at that takeoff. If I were to close this trade right now, right here, I am already over 1 to 1 in my trade. I am already over a 1 to 1. And of course, anybody who knows me know that I don't joke with my 1 to 1s. I like to take profit at a 1 to 1. Very nice and efficient way of looking at the market. I love to just take profit at a 1 to 1. That is primarily because I'm here to pay myself. I'm not here to hold this thing out and probably come and post it on Instagram and show you guys that, yes, we've just had a very big 1 to 100 win and stuff like that. No, I'm very much interested in paying myself. And this trade is running its own. And the reason we have this here marked in from this high to this high, this is another run on liquidity. So this high has been taken. There's a sell coming through. This is exactly how we look at the market. So if we bring in, number one, we identify the trend. You can see how we're projecting this to look like. So we're projecting this to come into this area, run this liquidity, pick up orders, and then sell to continue this original trend. And of course, you can see how my lines are marked. In the coming months, please come and check this chart, come and see this and see if there is any good, if this thing plays out exactly the way I've shown it to you or not. Go through your charts. You cannot, trust me, if you see this thing, you cannot unsee. And this is why when I'm teaching, I teach with so much confidence, because I have a very, very sound logic and sound proof to show you. I will show you to you and I'll take the trade. And this is exactly what I want you to do. So it is about teaching you how to actually make money and what genuinely works in the market and not anything else. Something that will genuinely put money in your pocket as a trader. That is exactly what I am trying to show you here. That's exactly what I'm trying to show you. So the components of our trading system, please don't forget. Trend. Oh man, I think that's quite big. Let's cut this down, right? So remember, trend, liquidity, which I've shown you behind every high. The moment the market takes out a high, expect a move in the other direction. Behind every high, behind every low, rest liquidity. And if to avoid any form of doubts, can anybody just pick any? You have to tell us our benefit. XAUSB, please do trade. Yes, I trade gold. Okay, I'm not getting to the questions now. I'll get to the questions later. Please just give me some time. I'll get to the questions later. Yes, I do trade gold. Please, what's 1 to 1? All right, I'll explain that. All right. So now, order flow is simply what you see here, that the institutions are making money selling this market to the downside, meaning the order flow. The flow of orders into the marketplace is bearish. And I can assure you, if you do not move in the same direction that the people who know this market more than you, who run this market, who own this market, if you do not move in the same direction that they move, you will be crushed. You will be absolutely crushed. And also looking at support and resistance, the reason that support and resistance is here is because support and resistance is actually the bare basics, is the foundation of almost all technical analysis. I mean, the market breaks through this, a retest, this, that. But one of the things that I like to actually remind my students is that support and resistance they also serve as areas where institutions could do a very, very considerable amount of damage. You will not even believe the kind of damage that these guys can do at those levels. They can do very insane damages because, yes, you see a certain level and within you believe that that is an area that is likely to hold. The moment the market begins to trade into those areas, support and resistance, that is what you think within you that, okay, the market is, if it breaks a retest, it breaks a retest. I can assure you, yes, it will break and retest, but there is a very, very high chance that around those areas where you're waiting for break and retest, for instance, here, they will also do their liquidity run. So first of all, we have a resistance, we break above it. If you had bought the supports on this first candle, yeah, you would have been a bit right, but then the market would have come back and taken you right out of it. Take a look at this second spike. The market comes back the second time and takes you out. It is not always, and if you probably extended it here, first bounce, the second one takes you out. This is exactly why you see traders a lot of the time, you get into a trade and the next thing, the market takes you out and it continues to move in your direction. This was probably one of the biggest frustrations I faced as a trader. I was wondering why. I felt like someone was after me. I mean, I'm just one person in my room trying to trade the markets. The market cannot possibly know who I am. So it is that these guys always seek liquidity, and until someone is taken out of the market never changes directions. I can assure you that. All right. So that is that about one of the things we look at. And of course, using fundamental analysis. Fundamental analysis is basically where we're looking at economic data, economic events, and we're trying to make these trading decisions based on those things. However, how we use it, because if you look at this technical chart, for instance, I cannot see NFP here. There is no NFP, there's no FOMC, CPI, all those things. It is not here. However, we know for sure that with all of this, the market will always go to where there's liquidity and where there are orders. And of course, this spike up here might have been a news. So oftentimes, the news itself does not have anything to do with the direction of the market. The market knows where it wants to go. But what the news does most of the time is that it acts as a catalyst. It now speeds up the process with which the market can go there. All right. So that is actually how we use the news in our fundamental analysis. I look out for news releases, very heavy news releases, and I try to stay out of very, very strong news releases. I don't want to be in the market when, let's say, for instance, there's an election going on in Britain, or there is probably a bank holiday, or there's an earthquake in Japan, or Brexit, all of these things. I don't want to be in the market because I know that in those times, there is no limit whatsoever to what the market makers can actually do. They can run a lot of buy stops. You can see how this has been conveniently taken out. So imagine what we can actually see if we should get into a situation like that. All right. So I'm going to quickly go over a few questions. All right. I'm going to quickly go over a few questions, and I'm going to quickly go over a few questions from the chat. So I can see your screen. Yes, please. Augustine is asking, can we get recordings of each teachings after the class? I think we can find a way to arrange for that. My question is that we all have the benefits of this platform. According to your understanding, you're just introducing the platform. I really don't understand that. Please, you trade gold? Yes, I do trade gold. Abba Abubakar, I really don't understand your question, to be honest. All right, so can we combine both trend and other strategies before making a trade? Now, this is okay. Now, Benjamin Olajire asked, what is a 1-to-1, 1:1? So for instance, I am going to now demonstrate what that means. So for instance, whenever this is the position tool, this thing you see here is called position tool. So what I'm going to do is that I'm going to, my stop level is going to be 50 pips. And my take profit is also going to be 50 pips. So I'm going to quickly impute that in. And you can now see here, we have this number 1 here. So what this means, 1-to-1, what it means is that my risk is equal to my reward. Meaning that if I am risking $10, my reward or expected return on the trade is equally $10. So I am risking 1 to get 1. I am risking 10 to get 10. I am risking 20 to get 20. So it means that the risk is directly equal to the reward. That is what it means. All right. So that is exactly what this means. All right. So the risk is directly equal to the reward. And if we have a 1 to 2, say we now take this and double it up to 1 to 100. So what that now means is you can now see here we have 2. So it means my reward is now twice my risk. That is the simple meaning of this. So my reward is at least 2 times my risk. So if I'm risking $10, I am expecting a return of, if I'm risking $2, I'm expecting a return of $4. So you always multiply by whatever the risk to reward is. So that is the meaning of 1 to 1. So it's usually expressed in forms of ratios. So usually express it in something like this: 1:1. So if the risk is 2 times, you have 1:2, 1:2. If it's 3 times, 1:3. If it's 4 times, 1:4, and all that. So that's how it might look before. That's how it might look. All right. And let's see if we have any further questions. My screen is not showing. Please, will my recorded version help me? All right. I mean, if you sign up with Tickmill and make a deposit in your account, you will get these recordings. I mean, I want to. All right. Can you combine both trend and other strategies? I think for a lot of strategies, of course, there are counter trend strategies out there, but for a lot of strategies, you need to be on the side of the trend. If you are really going to be able to make money in this business, you need to be on the same side of the market. You're right. You need to be on the side of the trend. You don't want to, do anything that is, against the trend. You don't want to take counter trend trades. Trust me. And the funny thing is that a lot of times when traders come into the business, it is usually, most beginner traders start out as counter trend, because, for instance, if you look at this particular trade setup that we have here, and you see this fall, you might not have the mind, you're not going to have the willpower to get into this place and take a buy because you're seeing this drop. But me seeing this drop as someone with a lot of experience in the market, I know that this is simply a pullback playing along with this overall uptrend. And if I look at the weekly chart, I see clearly that, yes, there's also a different pattern I use over the 1, 2, 3. We've had 3 consecutive weeks of bullish price action, and now we're taking a bit of a relief. I know very well that we are high. We're very much likely to continue to head higher on the market rather than, expecting a reversal. I mean, if it was before, I would be expecting this to sell, I would do so. I would draw so many things on my chart and expect this to sell. But having an understanding of liquidity, how the market books price, or, that's actually where the game changer came in for me. All right. So you can combine multiple things. Now you can equally combine this with support and resistance. If you are a support and resistance trader, you can actually do that. I mean, if you're a support and resistance trader and you want to trade the trend, all right, we're heading here. You can do a support and resistance level in here, and you can trade this as a break and retest. So you can see same thing, but different approach. So resistance, resistance, resistance. We break above it. Now the area could be acting as support. So this could be a different way for you to look at it, depending on how you trade. And if you come back into history, you are equally going to find how it acted as support in the past as well. So the bodies of the candle, if I take this back and I see, all right, so you can see support, it bounces through. The same thing happened here. Just take a look at that. The market had this low. So the moment the market came down, hit this level, we got a buy from there, even though eventually got traded through. But you already know that, yes, we hit it, we traded through, and then the market came back. All right. So these are the things you want to really, really pay attention to. So you can trade this as support and resistance as well and combine it with multiple things, and it gives you very optimum results. So hello, my name is Liberty. How many pairs do you trade? Liberty, you will not even believe it. I trade mostly dollar related pairs because they tend to follow technical charts a lot. Well, trust me, my system, I can trade anything under the sun. As long as it moves like this, I can actually look at it and make very sound trading decisions. I mean, I think I took a trade on Euro Aussie yesterday, and what was that trade? It hit a 1-to-1 and turned around, I think. Yeah, so this was a trade. So you can see how the same thing, where is that? I think this hit a 1-to-1 and the market quickly showed who's boss. So here, this is why I take these 1-to-1s actually. I mean, book a one-to-one and get out immediately. I don't do anything. I'm not trying to be a superhero in any story. So, I mean, you can see this is Canadian dollar. These are trades I've taken in the past. And there's something here again on, I think this one has become a missed trade because it didn't reach this level. So, I mean, I trade loads and loads of things, actually. There's really no limit to what you can do if you know what you're doing. So how do we identify liquidity zones? Sam Okoje asked me. So Sam Okoje, if you want to identify liquidity zones, you must look behind every high and every low within the market. Do any high you see that the market has not traded into before or traded above. For instance, where we have liquidity sitting in this market right now, as we speak, we have liquidity sitting above here. Here is liquidity. So let's say, for instance, this high here, this is liquidity sitting here because the market, no candle has traded above or into this area. So personally, if you're trading, you can use this as an area to take your target from. So for instance, I'm in this trade, I mean, I could easily aim for probably, this high here. I could aim for somewhere here and use that liquidity as my target. In fact, that might actually be what I'll even do. So you can use this point. So behind every high that the market has not gotten into, we don't have any overlapping candle here. And equally here as well, there is no candle above here. No candle has traded. The price of the market in recent time has not traded above this area here. So that is why we're going to be looking at this area. And of course, yes, we're going to take that as our liquidity point. All right. So for us, this is liquidity. This is liquidity. So, and then this one here, the market has traded below it. So now the liquidity has been taken. So any high and low, and now there's also liquidity here. So you can see what we mean by liquidity. Me, that I'm in this trade. Can you see that my stop loss is right behind here? Oh yeah, so my stop loss is right behind there. So if the market should decide to maybe for whatever reason come down hard and take this low, of course, my stop loss will be taken and I'll be out of the trade. So that is exactly what we mean by liquidity. So behind every high and every low, you have liquidity sitting on every untested high and every untested low. We have liquidity sitting at those points. All right. So I'll quickly get in and take more questions, so that, it doesn't get too long. So how can I be a scalper trader? In the beginning of your trading career, please, you don't want to be a scalper. I appeal to you. They're not going to be, you don't want to be a scalper, please. You don't want to do that as a beginner trader. You don't want to do that. You want to be able to have a very deep understanding of the basics and, develop from there. All right. So this is my first time of attending this class. There are different sessions. Are the teachings for the class is going to be the same or different? So we're going to be teaching on different topics, actually. So liquidity level of support and resistance, I can't differentiate the two. So please differentiate it. All right. All right. So, so for the guy who is asking, for Augustine Akpede, who is asking if we're going to be teaching the same thing, of course, we are going to be teaching you different things across 4 different episodes of this webinar. So next week, Wednesday, we have another one coming. We're going to be teaching you something different as well. And then, of course, we're going to equally, if you now come into the community as well, the Chukwara Trading Academy community, of course, based on the sponsorship of Tickmill, you'll be able to learn, have a full grasp of how we trade. All right. And for you to get into the community, we require that you make a deposit into your Tickmill account, and then we add you to our community and show you the exact process of how we look at the market. All right. All right. So, anonymous attendee asks, liquidity level and support and resistance. Can you please differentiate the two? So, support and resistance is basically an area or zone where price is likely to react from. Now, I'm going to show you that using a different. Let me pick a different pair. All right, so let's pick a different pair. Let's pick. I mean, can someone pick a currency pair? I mean, I'm new here. Today is my first time. Is there any way I can get more knowledge? Sure, you can get more knowledge by, making a deposit into your Tickmill account. The moment you make a deposit, minimum $100, put that into your Tickmill account. And ultimately, the moment you do that, send us a message. We're going to add you to our community, and you will watch us trade, and of course use all these methods day-to-day basis. And we're going to show you exactly how we trade. And of course, we have our new office coming through as well. Okay, Sam Okoje says GBP USD. So we have our new office coming through as well. So as soon as our office is ready, you are going to be able to come in there and receive classes absolutely free, courtesy of Tickmill. So how do we contact you after funding our account? Does a broker accept crypto? Yes, Liberty. Tickmill accepts crypto a whole lot. We use crypto for a whole lot of things. You can make a deposit with crypto, and you can equally make a withdrawal with crypto. All right. Looking at the market, what are we expecting of dollar pairs? I mean, dollar pairs, I'm expecting a bit of weakness from dollar pairs. For instance, this is a missed trade for me, actually, guys. You can see I missed this one completely. I was thinking of getting an entry earlier on, but eventually you can see how, in fact, I had to delete the order. I was trying to get in from this order block in here, and eventually the market never got up there and just, dropped off. So I've missed that one, guys. There's nothing I can do. You always have these missed trades, and that's where you should have your psychology in check. So for instance, someone asked, what is the difference between liquidity and support and resistance? So support and resistance is an area on your chart where price is likely to be sensitive. So this is support and resistance that I have just drawn. Can we all agree that this is support and resistance? This is a support and resistance area. Can we all agree on that? If we can all agree that this is support and resistance, yes, it is support and resistance. You can see how the market has bounced off the zone very well. Now, where is liquidity now sitting in the market? Liquidity is sitting here, right at this low. This low here is the sell side liquidity. This is the liquidity in this market, because this is a low that the market has not overrun. Let's see, until this market comes and trades below this level. This level is our most recent liquidity level. This level is liquidity because the market has not gone below it. So, and you can see all on this side here, the market trades below, the liquidity is gone. The market has traded below it. I think if we look at this one, I don't know if the market has taken that. So here as well, the market takes this one, takes this, turns around. And then the moment the market took this level, this is the new liquidity here. So this low here is where liquidity is residing, meaning all the orders have been washed out, and now the most recent orders in this market are sitting right at this level. All right. So any office in Port Harcourt? We do not have an office in Port Harcourt yet, Liberty, but at the moment we have Chigwara Trading Academy office in Lagos that also supports Tickmill. So the office is sponsored by Tickmill anyway. So, but the office is used for Tickmill activities. You can, come in there, get support, get verification and all that. But primarily what we do is that we teach you how to trade within the office, and you can join the online sessions of Chigwara Trading Academy. So I think I've shown you, I think I've been able to go through all the questions. I think I've been able to go through all the questions that you guys. So someone, Jamil, asked in the beginning if we have swap-free accounts for Muslims. Yes, we absolutely have swap-free accounts for Muslims. For those of you who want to, who are Muslims, if you get a letter from your local mosque showing us for real that you are really a Muslim, of course, we are going to give you access to our swap-free account. All right. So can I rep Tickmill? Absolutely. Liberty, you can rep Tickmill in Port Harcourt. It'll be very, very nice for you to do that. If you have a trading academy or you teach people how to trade, or you have something you organize, Tickmill will absolutely love to sponsor that. And these are the kind of partnerships we look for, so you can organize events, organize seminars, webinars. And if you need me to be there in person, I will be there in person to, support you as well. And then you can get materials and every single thing you might need to succeed in the business. So Liberty, please shoot me a message on Instagram. Let me quickly type my Instagram handle here so that I can guide you on how you can, rep Tickmill over there. So if you send me a message on Instagram right now, please don't send it right now. Please don't send it right now. I'm joking. If you send me a message on Instagram, I will respond. So please send a message, this handle, follow it right away. I'm going to get rid of the E very soon. I mean, I don't even know how that E came there. I mean, I put it there, but please just send me a message on Instagram and I'll be more than happy to get back to you. All right. please just do that. Do that as soon as you can. Send me a message, and then we'll begin your process of onboarding to become a partner of TickMill. So you can represent TickMill over there. You can organize webinars, you can organize seminars, and TickMill will sponsor that, give you all the materials you need, all the support you need, organize giveaways for your attendees, all of these things. These are things you can get. These are benefits you get. And of course, there are personal benefits that come to you as well as a partner of TickMill, all right? So just send me a message. Let's discuss that, all right? So I think with that, what if I have a certificate to show I'm Muslim? Will I be given a swap-free account? Yes, you will be given a swap-free account if you give us evidence that you're a Muslim from your local mosque. Please, we're going to give you the account. All right. So I believe I have answered all the questions. So I believe I have answered all the questions. All right. A certificate from an Islamic institute. Absolutely. Yes, we're going to grant that. How do we contact you after funding our account? Does a broker accept crypto? Yes, please. After you fund your account, please send me a message on Instagram at this handle here, Liberty Snyder. Please send me a message on this handle, right? Send me a message on that handle. Please, what is swap-free account? So swap-free account, these are account types that we give to Muslims. So whenever you hold your trade overnight, usually at the end of each trading day, at the end of each session changeover for the day, swaps are added to all accounts. All right. So more like these are like interests, or these are like charges for holding your trades overnight outside of commission. So what usually happens is if you hold your trade for multiple days, on every single day, for every single day that you hold your trade, we're going to put a swap on the account. It's going to be like a small fee relative to the trade that you take, or to the trade volume that you take. So that's how it works. So an account that does not have those charges, or that commission is not put on, is called a swap-free account, because Muslims don't do interest in their business. Muslims don't, their faith is against interest rates. So you can't take swap from a Muslim. So looking at the market, what are we expecting for the dollar pairs? At least for the short run, we want the dollar to continue to be bullish. So Ekelem, Chinon, so I'm late. When is the next class? Please, Wednesday. Wednesday is the next class. Next week, Wednesday. Please do not miss it. Next week, Wednesday is the next class. All right. So I'm in Kenya, Nairobi. Is there a way I can get my own TickMill account and fund it? I'm new to all this. I want to join the fund. Absolutely, yes, you can join. Please do send me a message on Instagram at Hosanna Chikwado. Please send me a message on Instagram, and I'll be more than happy to get back to you to help you get started. All right. Okay, you're welcome, Sam Okoje. All right. So I think at this point, I have answered every question there is. I've answered every question that you guys have been able to, send in. So what we're going to do is that next class, please, guys, let us come early as we can. Let us try to, attend class early. All right. So next class, we are going to actually dive deep. We're not just going to be looking at, technical analysis and all these things. We're going to be looking at so much more. All right. And one of the things that we're really, really going to pay very, very deep attention to, it is the mindset of a trader. We want you to have the proper mindset that will help you to be profitable in this business. Because if you do not have the kind of mindset that that is required of you to be able to do this business, it's going to be very, very difficult to actually succeed. So regardless of what we teach you technically, regardless of what you might know in terms of technicalities, and everything, you need a very, very solid mindset to be able to, make a living out of this. Because at the end of the day, when it all comes down to everything, it is your mindset that is at work. So next week, apart from talking about mindset, I will also be showing you the best pairs. And next week, you're going to watch me use all of the things that we've talked about, trend, direction, all of these things. Next week, I'm going to use all of these things to analyze the market and show you the best pairs, what the market is likely to be doing for the rest of 2023. and how you should be positioning yourself at very specific price points, at very specific points to be able to capitalize on all of these moves. So, excuse me, you don't want to miss out on all of this thing. So can someone residing within Lagos come to your office to learn? Absolutely, yes. If you are within Lagos, we would love to have you in our office where you can come and learn as well. And if you come there, you are going to meet me in person. All right. So it won't be online again. It's going to be me. You're going to see me there. You'll be able to ask me all the questions you want to ask me. And I'll be more than happy to answer you. All right. Do you day trade? Yes, I do day trade. Absolutely. Yes, I do. So I'm a day and swing trader, actually. All right. So how many pairs do I trade? Yes, I've answered that. So next week, we're going to be looking at the market, long-term projections, looking at things on bigger picture, and absolutely, we're going to be crushing it together. So if you are here with us, one thing I would encourage you to do is that same way you can see me taking this trade. In fact, what I'm going to do is I think this trade is a little over a 1-to-1. If I can just check this. This is a little over a 1-to-1 already. All right. So this is sitting over a 1-to-1 already. So if you head over to Instagram, I am going to show you proof of this particular trade that I took. All right. I'm going to show you proof that I actually took this trade. So I'm going to post it on Instagram, and you will see that, yes, this guy actually took that trade. All right. He didn't just talk about it or, just, say things. I'll actually show you proof that, yes, we did take the trade. All right. So please head over to Instagram. You are going to see evidence of this trade taken live. And, I think I might take it out at a 1 to 1.5 risk to reward. Okay, let's just take it out at 2. Let's take it out at 2.5. So regardless of anything, I'm going to show you evidence of this trade live on Instagram. So if you head over to my Instagram page at Hosanna Chukwado, you will see evidence that, yes, we took this trade. So next week, as we actually analyze the market, it's a Wednesday. Wednesdays are very good in the market. As we analyze the market, we are going to actually take trades together, and you will see me take a live trade in front of you so that you understand that, yes, whatever it is that we're showing you in the market, these are actions that you can implement, and you'll be able to actually make real money using all of these methods that we teach. So our new office is in Berger. We're currently working on a new office right now. So our new office is in Berger. If you know River Valley Estate, the moment you walk into River Valley Estate, just to your left, you will see our office there, Chukwado Trading Academy. So River Valley Estate in Berger, that is where our new office is. All right. All right. So what is your name on Instagram? So on Instagram, my name is so with an E. So I'll have to get rid of that E very soon, actually. So that's my name on Instagram. All right. So thank you very much, every single person who came through. And I'm very grateful to have you all here. I'm glad that you all attended. I'm glad that you all showed up. And I want you all to keep a date next week. It is even going to be, we're going to come in with a lot of gems for you, a lot of value, for the entire community. The reason we are doing all of this is to make sure that we will not just talk about this. We didn't just talk about it. We show you how it is done and how you can actually implement it, hold you by the hands and take you to profitability. That is why we're here. We want our traders to succeed and trade with us long term. All right. So please don't forget, those of you that are yet to sign up with Tickmill. Okay. I think I've clicked on something on my monitor. Please, sorry about that. Okay, I think, all right, now I'm back. Sorry about that. So those of you that are yet to sign up, please make sure that you sign up with Tickmill and fund your accounts, because next week we're going to be making some money together. All right. So if it takes money to make money, minimum deposit with Tickmill is $100. That's the minimum deposit. All right. So now make sure that you fund your accounts, and when you have money in your account, when you do fund your accounts, of course, it will make sense to, so that next week when we call trades, we can actually take these trades together and then, watch the markets do its thing. All right. So thank you very much, ladies and gentlemen, for attending. If you have any more questions, please, you can send those questions in via Instagram. Of course, I'll be more than happy to attend to you. And I will send you the official business line. That's not my personal number. So that's the official business line. You can always send a message, and someone will definitely get back to you if you need anything. All right. So thank you very much, everyone. Cheers, and God bless.